Alpha Investor, Alpha Investing 5.0. This is the fifth one, right? So for those of you who are new or who have not maybe not came to my presentation before, I do something called Alpha Investing where I teach you how to beat the returns of the S&P 500. Alpha is just getting higher returns in the S&P 500, and that's what we are looking for. And after today, I really want to help you guys set up and be able to do this for 2025. So let's go ahead and get started. All right, in the chat, you already know how we do. Let me know, is the chart going up or down? Let me know in the chat. I need y'all to be active. I need y'all to start paying attention. The only way we're going to be able to really start doing things better is if we actually put the work in and practice, right? So everybody in the chat, tell me what you think, is the chart going up or down? Down, up, 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 up. I see a lot of mixed signals, right? I see a lot of mixed signals. Sideways, right? Sideways. Yep. Yep. So let me tell you guys a secret. All of you are correct, right? All of you are correct. You have to know the relative time frame that you're looking at. Look at the bottom. It goes all the way back from May, June, July, August, September, October, right? So this stock has been in the uptrend since September. So from September, is the stock going up or down? Right? A lot of us are not understanding what direction the stock is going because you don't even know from what month that you are looking at to really determine if said stock is going up or down. So you need to pay attention to the month, right? Because if I look from May to September, the stock was going down, right? So that's what would I be doing, going long or short? From May to September, would I be going long or short? Right, we're gonna be going short. I said this on the last presentation. We all already know how to trade and invest. You have to get the direction right first, right? So September to, let's say, November, would I be going long or short? From September to November, long or short? Right? Long. All of you guys already know the answer, right? Now, from November to now, right? Someone said in the chat, the chart is going a little bit of sideways, right? But I see something called a double top, which means that the price is probably going to fall below the level that it's at now, which means they're going to be forward. There's going to be more bearish movement to the downside in the near future, right? That does not mean I will do a short, right? Because the main direction of this chart from October or September is still up, right? So I want to go in the main direction, flow with the direction of the chart. Does that make sense to everybody? Yes or no? Let me know in the chat. Perfect. Perfect. And I want you guys to understand something right now, right? It's not going to be picture perfect. The chart is never going to be picture perfect. You're never going to have the perfect analysis on the stock, right? So who remember in the chat when I called Lululemon last week, right? If you remember when I called Lululemon, put a 1 in the chat. Right? Right. And I've been talking about that for the last 4 weeks. Right? It takes time, preparation, practice, and discipline. It's not going to be perfect, but you have to put the pieces together to get an idea. Next chart. Is it going up or down? So should we be going long or short? Right? So the next time that you get in the play or you're looking to get in the play, look at the chart and really ask yourself, is the chart going up or down? And that alone will probably increase your profitability by 25 to 30%. Just that alone. Going with the direction of the market. Y'all already have contracts and expirations for 3 to 6 and 8 months out. If you go with the flow of the direction at the right time, you're going to have less drawdown, which is what you guys don't want. That's the problem that all of us are having. We're having too much drawdown, right? Or that's what the problem that I'm seeing with everybody in the chat. We're having too much drawdown, right? So you get into play and you get down 30, 40%. You might finish up on it 100% or 50%, right? But psychologically, it's going to be hard for you to even get into another trade because you were down 30, 40% on that trade before that. Psychologically, you don't even want to take a trade anymore. And you might be down 30, 40% for 2 months waiting for that position to turn around, which is fine. But psychologically, don't you think that will mess with your head? Being down on something for 2 months, 30%, 40%, don't you think psychologically you wouldn't even want to take a trade again? How hard would it be if we were boxers, right? And we fought and we got beat up for 2 months straight, right? Your confidence is messed up. You need an easy win. You need to get back in your groove. You need an easy win. And if you're down 30%, 40%, it's going to be very, very hard for you to even want to take another trade, let alone do it the right way without being emotional because you're already down. Right? Next chart. Is this chart going up or down? Right. Being down makes you do makes you make irrational decisions. Right? Is this chart going up or down? It's going down. It's down 65% from the high. Right? So it's down and we're shorting, like Matthew said. Does that make sense to everybody why we're going down and why we're shorting? Does it make sense?
When you're saying it's going down because you're looking at from the past point, it was up and now it's coming down. I guess I was looking at the closer time between now, like September and now.
Right. So go from the all-time high. I have the red. I do the red thing for a reason. So that's the measurement from the all-time high to where the stock is now. It's down 65% from the all-time high.
Gotcha.
If the S&P is down more than 20%, that's a bear market. So we need to be using the same thing when it comes to individual stocks. This stock is basically in a depression, or it was in a depression because at one point it was down 80% and it's still down 65% from the all-time high. So this stock is in a depression right now. We need to be using the same thing across the board. So if the S&P is below 20% or is down 20%, it's in a bear market. If a stock is below 20%, 30%, it's in a bear market.
Monty, can I ask a question on that last chart?
If you can, I would try to let it wait to the end.
All right, no problem. No, it's all good.
Okay, cool. Next, start investing and never stop. This is the blueprint that I'm personally following, just to let you guys know, right? So Warren Buffett, age 19, he was worth 10K, 21, 20K, 26, 140K, right? But let's skip to age 47, where he was worth 67 million, and then 6 years later, he was worth $1 billion, right? What an increase in net worth from compound interest. On the left-hand side, right? This is an example, an investment calculator. A lot of you all need to do this so you can actually understand the power, so you can actually be consistent and keep going, because there's a lot of people that I've taught over the last year or two who have more money than me, could have made more money than me, but they weren't consistent and they stopped, right? I'm not going to stop. I'm never going to stop. Everyone's 401ks are in this, right? August 5th, we had a global market sell-off. That should show you how many people are invested in the US stock market. If our stock market fell, and then that led to all the other countries' stock markets falling, India, Germany, Japan, right? That shows you how many people are literally putting their money in the US stock market. So if you're not putting your money here, you are making a mistake. But this is an example. If you started with $10,000 and all you did was invest $300 a month and you got a rate of return of 40%. Now, a lot of you may be saying 40% may be high, but if you joined the last presentation or anyone's before that, you'll know that 40% is something that you can achieve. You just have to be patient and disciplined, right? I pulled out the returns last presentation and I'm up 137% on Tesla now. It just gained another 20%. In the last year and a half from me being invested in that, investing at the right price, long term, not options wise, right? So a lot of us, we're trying to get 100% return or 60, 70% return on the option when we haven't even got it long term first. You need to do it long term first for you to even understand the waves and the moves of the market, for you to psychologically be more calm, be more patient. The difference between me and most of you, I've looked at the market and studied the market so well that I know where we are in the market, so I can be patient. I could take a week off and still come back to the chart and be okay because I know where we are in the market. Start investing and never stop. All you did was invest $46,000 and you got $549,000, right? Now, let me tell you something. A lot of us, a lot of you all may be looking towards retirement, right? A lot of you may be looking towards retirement. And trust me, I've worked in the insurance industry. I worked with all the people who are living off of Social Security. Guess what? When inflation raises higher, they're not raising that money that they're getting. The money that they're getting is staying the same. So if the money that they're getting is staying the same, but inflation is going up, they are losing money. So this 600,000 that you're going to get in 10 years, if you just stay disciplined and consistent, is probably only going to be worth about 400,000, which means that we probably need to put more money in there. Social Security is running out and has been running out. So trust me, you do not want to depend on that. Next slide. Let's really get into it, right? 8% is the level that you need to watch. This is unemployment. So anytime Black or African American employment goes above 8%, we're going to have a recession. We're at 6.4% right now. So that is something that you need to watch. This is a different type of level of research. We have to understand economics, right? And we already know this is not a race thing, right? But if you just pay attention to the chart, you can see who is going to go to first, who is going to go to second, and who it is going to go to last, right? This is something that we have to use for our research. Again, this is not a race thing, right? But use this as data to understand and know what is going to come next. Who remembers in 2020 when the market went down? Put a 1 in the chat if you remember when the market went down in 2020. Right? Everybody was scared, right? Everybody talking about, it's a global pandemic, everything is shut down, all these businesses coming down, right? But guess what? That would have been a perfect opportunity for you to invest. 4 years later, you could have been a 400%, right? They do this on purpose. You're gonna understand later on in the presentation. But again, write this down. 8% is the level that you need to watch. The gray lines are recessions on this chart, if you didn't know. The gray lines are recessions. Every time that Black or African American unemployment has went above 8%, we have had a recession. Next. Military spending, right? So how do you catch a company like Palantir early before it blows up or before it takes off, right? Don't think that the United States and China are not going to go to war. It's just not this year, or it may not be next year. But guess what? 2026, 27, maybe 28. Trust me, it's going to come. Companies and countries put their money where their mouth is, right? So if you see that the United States is drastically increasing their military spending, that should tell you that those companies are going to be the companies to benefit. I keep telling you guys, it's world conflict / resolution first, then politics, then economics, then earnings, then innovation, right? So this is at the top of the food chain. And as you can see, China is not that far behind us. And you can see Russia as well. When you think about Russia and Ukraine, right? And this is from 2021 to 2022. We're not even going to talk about the numbers now, but we all know that the numbers are higher, right? But 65,000 to 86,000, that's a big jump in military spending for Russia, right? 806,000 to 876,000 is a big jump for the US. So you have to go back and do the research, and you have to understand why certain companies are going up, right? So we could have, you could have found Palantir and knew Palantir was going to do well way back when. This was September 27th, when Palantir won a $250 million US Army research contract. That's just for research. That's just for research. They didn't give the US anything, right? They didn't give them a service. They didn't give them a product yet. This is just for research, right? So what if we go to war with China? What if? What company is going to benefit from that? It's Palantir, right? And if you look at the chart, cup and handle, you would have been up an easy 400% on this, right? All of these things, the chart just tells you when, right? All these fundamentals are put in place before. So them winning the contract, right? Them getting the White House money, all this stuff is put into play way beforehand, and the chart just tells you when to execute. Now, going to politics, if TikTok is banned, then what company will benefit? Put it in the chat, let me know. If TikTok gets banned, what company will benefit from that? So over the next 4 years, it seems like we all know what company that we need to invest in, right? And just like Elon Musk did, right? Just like Elon Musk did, Meta has donated $1 million to Trump's 2025 inauguration because he's trying to get political favor in the White House. That's why I keep telling you guys, it's world conflict resolution, and then politics is second. Tesla is running up because of how close Elon is to Trump and his White House power, right? So these are things that we need to pay attention to. You guys are paying attention to the wrong things and the wrong metrics, which is why you're not understanding where the market is going, and you're not understanding why the market is moving the way it's moving. It's the same thing over and over and over. Always go back to those 5 things. Next, Jerome Powell, right? So going to economics. I don't even have to put much on here. If you guys know who Jerome Powell is, you know what's coming on Wednesday, right? Interest rate decision on Wednesday. You should already know what's coming, right? This man has control over your interest rate. So the rate for your car, for your mortgage, right? You want a loan of credit, right? He has control over this. Next, innovation and earnings, right? So Apple teamed up with Broadcom to develop its own AI chips, and they launched Siri with ChatGPT, right? So I had a good question that someone asked me in the Facebook group before Broadcom reported earnings, right? And they were trying to we were trying to figure out should that person hold their contract, right, through the earnings of AVGO, right? So if you look at my response on the left-hand side, it always goes back to the same thing over and over and over. World conflict resolution, politics, economics, earnings, and innovation, right? If all of those things are pointing in the right direction, are going up, the stock should follow that direction. They partnered with Apple, so that was innovation, right? Looking at the earnings historically from past performance, I said they should have beat earnings again, which they did, right? They beat earnings, but they missed on revenue. And I even said the real reason, the guidance and the outlook for 2025 would be the real determinant of if the stock pushes higher or lower after earnings. So if any of you paid attention to AVGO's earnings, yes, sir, Matthew, right? If any of you paid attention to AVGO's earnings or their stock, right? The stock jumped up for sure. The stock jumped up first, right? Then it came down, right? Then after the CEO got on, he talked about the future guidance and how much revenue that they see that they could potentially get from the AI boom and AI revolution through 2027. That is why the stock jumped up 20%, right? The stock didn't jump 20% at first. They beat earnings and they missed on revenue. It jumped up, then it came back down. As soon as he got on that call talking about the guidance and the revenue in the future, that's when the stock popped up, right? So these are things that you have to pay attention to. Stop paying attention to things that don't matter. Next, S&P 500, back-to-back 20+ gains often leads to future growth, right? So I'm data-driven. So you have to go back and you have to look at data to give you an idea, right? Going back to what I've said before, you have to have an idea, create a hypothesis, right? Then you have to do research, right? Then you have to get the data. This is the data. Then after that, then you can make a calculated bet using probabilities, risk to reward ratios, risk management, right? But 2025 should be a good year, just to let you guys know, right? Are we going to have a pullback? Yes, we are going to have a pullback, right? We're going to have a pullback in September, probably March, and maybe in January, right? We're going to have a pullback. So you are going to get an opportunity to invest. Don't think that the market is just going to take off on you, right? Like it did from 2009 to about 2014, where it just ran up, right? But looking at the data, next year historically should be a good year. right? So 1950 and 51, we were up 30 and 23%. Year after that, we were up 18%, right? 54 and 55, after two back-to-back years of good, we went up 7.4%, right? Then we dropped after 75 and 76, we had a drop of 76. We had a drop of 7%, right? Then we have 4 straight years of gains after two good back-to-back years of 20+%. The last time we did it was 88, 19, or 98 and 99. We dropped 9%. Now it's time for us to go up again, right? We had the negative year. Now it's time for us to go up and have a good year next year. And that is probably going to happen. And the average is 12.3%, or just use the median, which is 12.8%, which will give you an idea of how far the market will actually push up next year. Next, you need to be data driven. I'm going to keep saying this. So Bitcoin, right? I need you to pay attention to the right-hand side where it says total, right? So if we go from 2013, right? And I keep telling y'all, when I called the Lululemon play, right? Some things are not coincidences, right? Some things are patterns and trends that are all lining up at the same time for you to have an amazing entry point and make a lot of money. So if we go to 2013, Bitcoin had a very, very positive year, 5,500%, right? Then it had a negative year. Then we went positive for 1, 2, 3 years. Then we had a negative year, right? Then we went positive for 1, 2, 3 years. Then we had a negative year. Then we went positive for 1. This is the second year, 2024, that Bitcoin is going positive. So Bitcoin is going to keep running next year. Then it might fall in 2026 for us to get a better opportunity. But you have to be careful, right? Because now you have institutions and hedge funds in the asset now, so it's not going to move like it moved previously. If Bitcoin went from 3,000 to 60,000 without institutional investing or institutional buyers, right? What do you think is going to do with them in it now? BlackRock, Vanguard, right? And Microsoft made a mistake when they voted no on the shareholders to not have exposure to Bitcoin, because the US is going to make ourselves the Bitcoin reserve, right? Which means they're going to be buying Bitcoin. And if Bitcoin is an asset that's not like a regular currency, like the dollar, where you can have credit, right? Bitcoin cannot be inflationary because it has a limited supply. It does not have credit. Cash has credit because that's what we have made. Now, once you see the treasury start making Bitcoin notes, then that's when I would get worried, right? But that's not going to be for a while, maybe 10 years in the future. Next, you need to be the one to take control of your money. Nobody else is going to take control of my money, right? And y'all gonna see why at the end of this presentation, but you need to be the one to take control of your money. Only 8 funds in the history of mutual funds have outperformed the S&P 500 for more than 10 years straight. So why are you putting your money with them? I'm data driven. Why would you put your money in a stock that has not performed? Right? So in the chat, would you rather put your money, would you rather bet on LeBron or somebody from the G League? Right? Because that's what we're asking. Right? We're betting on LeBron at the end of the day. It's simple. So if you have an opportunity to create your portfolio with a LeBron, Shaquille O'Neal, Kobe Bryant, Yao Ming, I want Yao Ming, right? You got Steph Curry. You could put the best of the best in your portfolio. Why are we settling for less? Why are we settling for less? Right? And a lot of y'all didn't know me before this, but if you just go on my Facebook and you scroll down, right, you'll see some other things that I have posted on there. So August 5th, earlier this year, right, I bought Nvidia when it had that dip, right, when it went down to $93. Or no, it went down to $91. I bought it at $93. I caught that dip, right? And I said, if you didn't know, the professionals tried to get 7 to 12% a year, and I got that in one day. So as soon as I bought Nvidia, this comes from buying at the right price and buying where the hedge funds are buying, right? The stock shot up, and I got 7% in one day, right? And I even said I'm going to get 30 to 40% easily from this investment, easily, right? October 22nd, 2 months later, I was up 65%. on NVIDIA. This is long term. This is not an option. So a lot of you want to make a lot of money from options, right? But what about long term? If you watch the last presentation I did, I said you have to long term invest first and then stack on leaps on top of that. And then you will make a lot of money, right? And again, you don't have to listen to me. I really don't care who listens to me or not, but you will never be free until you invest. Ever. You will never ever be free until you invest. Next slide. If we are the product, we should know the trends before they do. I'm gonna break this down to you guys. Do you guys not understand that these companies that are making a lot of money are profiting off of us? Walmart, Home Depot, Meta, Apple, Microsoft. The only company that I could think of is NVIDIA, right? Because they have buyers from corporations, right? But all of these other companies are profiting off of us and our consumer trends. We know when we go into Walmart and less people are in there. We know when we go into Target and less people are in there than before, right? We know if we're spending more money on Amazon this year than we did last year. We already know before they do. They are trying to basically capture the consumer trends and invest in these companies based off of our patterns and our movements. We are the consumers, so we should know what's happening before them, which means we have an edge as retail investors and traders. I want to make something else abundantly clear to you, right? The next 10 to 20 years are probably going to be the hardest of your life, all of us. Blackstone bought Ancestry.com. So all that data that everybody put on Ancestry.com, guess what? Now a hedge fund has it. And guess what they're going to do? They're going to use that data to make products to make money off of you and make assets to invest in those same assets in those same companies that are making money off of you. Right? And if you look to the left, that is a chart of inflation. So obviously you see a lot of green, right? So inflation is not going to stop. It's not going to go down. It's going to keep going, which means we have to make more money. We have to outpace inflation. The dollar, as we speak, is declining and losing value every day. Every day. Next. The rate of how fast you learn, and this is super, super important. The rate of how fast you learn things should improve every year. If not, you will get beat out by the younger generation who will do it naturally just because of technology. They are growing up in different types of technological movements and advancements of the world. So we didn't grow up with a TikTok, right? I didn't even grow up with a TikTok. But now the kids that are being born now are growing up with TikTok and YouTube at their disposal, right? So imagine not using Google when everybody else was using it. Imagine not using ChatGPT now when it's 10 times better than Google. If that's what you're doing, you are falling behind. ChatGPT is the new Google, TikTok is the new YouTube, and Netflix is and has been the new TV. They destroyed commercial TV a long time ago, right? And the whole point of life is evolution. If you're stuck in old ways, you're not evolving. That's in every aspect of life. That's when it comes to money, right? That's when it comes to your relationships. That's when it comes to your relationship with God, right? That's when it comes to your health. In every aspect of life, the whole point is evolution to become a better person, a better human being, right? So as I go on my journey of life, I have to have more compassion, more understanding, right? I have to work on teaching. I have to work on making more money financially. I have to work on my habits, right? Because I have to evolve and become a better person. I have to operate in the mindset of abundance. It goes back to character issues that we all have. Are we disciplined? Are we patient? Do we have work ethic to become a better person? So trading and investing is hard, right? Really, it's easy, right? But we disguise it and say that trading and investing is hard when really we just don't want to change ourselves. That's the hard part, because trading teaches you a lot about yourself. It will tell you if you are impatient. It will tell you if you're not putting the work in, right? It will tell you if you are not consistent. Next, work for the results that you want to provide. These are all the books that I have, right? And I told you, I done read over 20 books on investing. You can see Tony Robbins, Changing World Order, Rich Dad, Poor Dad, right? Berkshire Hathaway, Trend Following, that's the book I just finished, 600 pages later, right? You have to work for the result that you want to provide. I'm going to work and put the work in. And I want you guys to understand something. I'm not your competition. I'm your bridge, right? Me personally, I feel like no one else will outwork me. I'm going to be the best. I want to be the best. I want to strive to be the best. I'm not your competition, though. I am your bridge to help us all succeed and get to the same result and get to the same goal, because at the end of the day, that's what we all want, right? We all want to make money, right? We all want to have better quality of life. We all want to have more time to ourselves, right? But you have to put the work in. You have to. So a lot of you want to have the type of understanding or level of knowledge that I have in the market, but this is the work that I put in, just books wise. Told you I watched every episode of Trapping Tuesdays, every episode of Market Mondays. I watched every episode of Aristotle's Lives, right? I started this when I was 16 and I never stopped, right? So this is 4 years of dedication and work, right? When I was 18, I bought my very first course, $750. First paycheck ever went to that, right? Then January came around. I bought Trap's course on how to learn how to evaluate a company fundamentally, right? And then after that, I just been keep going. Get more books, get more information, learn it yourself, do it yourself, practice, practice, practice. This is 4 years, right? It takes work. Do not think that one day I just popped up, oh, I'm young and I can just get it. No, I put in the work. We all have to put in the work to get the results that we want, or you need to follow someone else who has. Next, let's talk about the week that we have ahead, right? So if you look at futures, we can look over those real fast. I'm long NASDAQ, I'm long ES, which is the S&P 500. I'm short the Dow, I'm short crude, I'm short ZB. And to give you guys a secret, if ZB is going down, that means that the S&P 500 in the market is probably going to go up. If ZB is going up, and ZB is the bond market, right? If ZB is going up, then that's an early indication to tell you that the overall market is going to probably come down, right? And I'm long NBTX, which is Bitcoin futures, and then I'm neutral on gold futures. Economic reports. Monday, we have U.S. services and manufacturing PMI. Real retail, we have retail sales on Tuesday, industrial production. Wednesday is really the big day that everyone's going to be waiting on, right? We have the interest rate decision, and Jerome Powell is going to talk. On Thursday, we have initial jobless claims, GDP, second revision. So how much did America grow? Existing home sales, that's going to be important. And then Friday, you have personal income, personal spending, PCE, and then core PCE. And we don't really have much earnings wise, but Wednesday we have Micron, Lennar, that's part of the home builder sector. Then Thursday we have Nike, FedEx, Accenture, and then Cintas, I believe that's how you say it.